Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here with Scott Melbye, CEO of Uranium Royalty Corporation and VP of Uranium Energy Corporation. Scott has over 4 decades of experience in the uranium sector. He's held various positions at Cameco and was advisor to the chairman of Kazatomprom. He was VP of Uranium Participation Corporation, which was turned into Sprott Physical Uranium Trust. Scott, thank you for your time, and thank you for your efforts on behalf of shareholders like myself and viewers of the channel.
Thank you, Steve. It's great to be with you, and it's exciting times for uranium more broadly, and certainly for both our companies. So it's good timing to be with you.
Yeah, I'm very excited about uranium. Go ahead and give us we'll start with Uranium Royalty Corporation, then we'll move on to Uranium Energy Corporation. Go ahead and give us an overview of Uranium Royalty Corporation, the market cap, debt, cash, and enterprise value.
Yeah, so Uranium Royalty Corp was launched publicly in December of 2019. We listed on the TSX at that time. It was a vision that we had kind of in the 2016-2017 time frame to really create a Franco-Nevada wheat and precious metal sandstorm type company in the uranium space that really didn't have such a vehicle. We've since listed on the NASDAQ, and really wonderful vehicle for investors to get diversified exposure on a global basis to a number of projects in our portfolio. We're currently invested in I think we're now at 21 royalty interests in 19 projects. We're heavily weighted in North America and Canada, the United States, not by design, but that's actually not a bad thing with the geopolitics today, but certainly actively pursuing royalties and streams in all the major uranium districts in the world, and we're quite active on that front. And the way we add royalties to the portfolio is either acquiring royalties that exist and acquire them in effectively the secondary market, or we create our own financing vehicles that would be project finance alternative to debt or equity.
Okay, you guys have 2.6 million pounds in the bank, is that?
We do. One strategy that we took, because at the time we launched, most uranium production in outside of sort of state-owned enterprises in Kazakhstan were either shut in or at reduced capacity because of the low uranium price. I mean, at one point there was no uranium production in North America at one point. We knew we needed to incentivize and really expose early investors to the uranium story, but in a very slightly different way. And we did that by acquiring uranium off the bottom of the market. The first big move in that regard was almost 10% shareholding in Yellowcake PLC as part of their IPO launch in London. That effectively put about $20 a pound uranium in our portfolio at that time. But since that time, we've gone into open market and have even tapped the Kazatomprom purchase options that we have under the Yellowcake relationship, to get to a point where we now have 2.6 million pounds of uranium at around $56 a pound cost basis. So not only has it been a very successful investment, really nice gains over this period, but that's our war chest. We have over 300 million in cash, no debt, and as we see royalty opportunities materialize, whether they be 10, 20, 50, even $100 million royalty opportunities, we can finance those off our own balance sheet. We'll sell uranium to buy royalties and streams. Okay, so 300 million cash in the bank. Your market cap? We're trading around 300 million. We've pulled back kind of in recent months. I know there's frustration amongst uranium investors because we ran up in the spot price from $20, $30 a pound all the way up to 106, and then have kind of settled back in the 80s. But I remind everyone that mid-80s is a pretty good level for a uranium price. But more importantly, this is really just a consolidation, I think a healthy consolidation in the uranium spot price, and the equities have fallen back as well. But I mean, we're really forming a base for the next leg up because the fundamentals are overwhelmingly positive. The structural deficit, we are seeing some of the lower hanging fruit of new mines coming into production, some of which are in our portfolio. But those are the easy ones. Those are the restart of mines that are already built and in place. We're going to need 5 to 6 more mines that are probably closer to greenfield new mine startups between now and 2030. And that's not going to come quickly. But a lot of these projects are going to need financing, and so we want to be there as a cost of capital, competitive cost of capital alternative for them to finance the mine development.
Okay, all right, so 300 market cap, I'm sorry, what's the cash position?
Yeah, I mean, our 350 million Canadian, our cash position is close to 300 million as we sit today. So the value of our uranium inventories is approaching our market cap at the point we're trading now at a
That's the point I was making, yeah.
Yeah,
okay.
no, it's an incredible, obviously not where we want to be, but it's an incredible entry point. If you're a value buyer, 0.4p to NAV is obviously not where royalty companies trade. I think when we're back in a steady state and the uranium market is heading back up, we're back to par with NAV or even a premium to NAV, which is typical with royalty and streaming companies.
Yeah.
So we got a lot of room to grow from where we're at.
Yeah, I did the math at 2.6 million pounds of U3O8 at $90 a pound. That's 234 million.
Yep.
So it's almost your market cap.
Yeah, that's exactly.
Okay. Hart wants to know what royalties do you have in place right now that are cash flowing?
Yeah, so it's really been nice to see the portfolio crystallize now, and we have a number of our royalty companies, counterparties back in production. The most notable is McArthur River, where we're getting paid out about $1.2 million in physical uranium last year. That'll be more this year because of the higher uranium price and higher production. So that's running and cash flowing. Cigar Lake will be a bigger royalty, probably $4 to $5 million annually, but is still working through a net profit interest calculation on the cost side. So we're probably within 2 years we'll see that kicking in. Langer Heinrich, we have a fixed price royalty there that is a cents per pound royalty. That's we'll be looking to receive our first check from them shortly. And then Lance Peninsula in Wyoming is looking to start up by the end of the year once they complete their central processing plant. So it's quite encouraging. We have other, I think Whirlwind Mine in the Colorado Plateau, Energy Fuels is ramping up as well. Broadly speaking, across the whole portfolio, we expect about 10 million in cash flow by 2027. 20 million by 2030, and 50 million 3 years after that. So it kind of gives you an idea of our ramp up of the projects in the pipeline. And, we have a very efficient model. I mean, the cost to run the company, sort of outside of the storage costs of physical uranium, it's 2.5, 3 million, G&A to run the company. So it's a very efficient model.
Yeah. How many employees do you have under Uranium Royalty?
We really are 5, 6 people. In key positions for us are in the due diligence and obviously finance. But we have Darcy Hirschkorn was 20 years with Cameco Global Exploration, is our chief technical officer. James Hatley is an advisor that works with us from a mine engineering perspective. We need that real qualified look at projects to properly model them, to identify what targets we want to approach and add in the portfolio. And then, of course, when we're in discussions with a counterparty, trying to put the proper price on what to acquire them for. So that due diligence effort is the most important aspect of what we do.
Yeah, okay. And as far as properties, most of your properties are where?
We're heavily weighted in the United States and Canada presently, both ISR and conventional in the U.S. We have Athabasca Basin interests and some in maritime Canada and in Labrador.
Okay, yeah, the safer jurisdictions. I could be wrong, but I think there will be a premium on assets that are.
Oh, believe me. I mean, with what's happening, Russia, Ukraine, really Kazakhstan is being rapidly consolidated by the Chinese and Russians, and even in Africa, sub-Saharan Africa with Niger, assets in stable jurisdictions is really that's important these days, and it will. It's already kind of seeing a premium.
Yeah, yeah. Okay, and follow up, when do you think you will reach positive cash flow based on current estimates of mine restarts?
Yeah, I mean, at the ramp up, I would say, probably by the end of next year. Also, I mean, we could sell some uranium in the interim too. You don't have to sell a lot of uranium at $90 or $100 a pound to generate a lot of cash. So we're really within, 12 to 24 months of that happening.
Okay. And Sylvia wants to know, she says, UROY bought U308 at about $100 a pound at the start of the year. Mm-hmm. Can you comment on where you think the spot and term price is going?
Yeah, well, we've bought uranium all the way up in this cycle, and I think at every time we've purchased, we've had people question, well, wow, what makes you so confident that the price is going up? And obviously our average inventory price now is $56 a pound, so we continue to believe, we don't think this is a peak by any means. The uranium market is in a structural deficit of 50 million pounds presently. Mm-hmm. It's probably 1.2 billion by 2040. So we really believe that this supply squeeze is going to continue, and it could be quite dramatic over the next 12, 24 months. And I don't see this as a short-lived boom and bust cycle either, because I think it will take a while to get the new mines brought online globally, and just at the point where we probably get up to the status, the kind of levels of production we need today, demand is increasing now as fast as mine production can come on. So we're obviously quite bullish, and but the uranium inventory has been a really important part of our strategy. But I will say that going forward, I think it will be less about physical uranium and more about royalties and streams. It's really been the right transitional strategy to get to this point. Yeah. You'll see us turning pounds into cash to buy royalties.
Awesome. That's pretty cool. And how many royalty plays are there on uranium?
The universe of royalties, it's quite extensive. And I think, if you're looking at existing royalties, they're nested in literally the estates of families. They're remnants of M&A deals with companies. We've approached a company that is not in the mining business that has a royalty on a very significant project that they really didn't even know they had. And so this is the importance of experience in the uranium royalty team, is that we can seek out and find those royalties. The MacArthur and Cigar Lake royalties were a good example, where we acquired from a 97-year-old gentleman that ran reserve oil and minerals in the 70s and 80s. He was part of the exploration success in the basin, sold his interests, retained a royalty, and we bought the interests from him rather than Orano or Cameco. So,
which they would never sell.
Yeah, exactly. They were quite shocked. I don't know if they had forgotten that the royalty was there, but when our press release came out, it was very interesting.
That's awesome. Okay.
But we're thrilled to be in those projects. They're great operators. Orano and Cameco, we're thrilled to have them operating those mines.
Oh, yeah. And how many publicly traded royalty plays are there?
We are the only pure uranium royalty and streaming company. We probably won't be in that position forever. Of course, the base and precious metals royalty industry is quite large. Yeah. And it doesn't mean that they can't interlope into the uranium space. And they have from time to time, but I do think our expertise in uranium gives us an edge. I think our understanding of the risk-reward in the uranium space gives us an edge as well. I think if you're in gold or copper royalties and you want to acquire a royalty that's cash flowing next year, there's lots of options. It's less uncertainty. We may be willing to take on more risk. Some of the highest quality projects in our industry may take 4 or 5 years to get into production. Mm-hmm. And we may structure things a little bit more differently in a longer term royalty like that. But I think we still very much have an edge, and I think we're also attractive counterparty as a financier, because when we come alongside and invest in a company's project, it's a bit of an endorsement of the project, and it expands their capital markets reach. So they're getting a lot more eyes and ears on their story by us investing in them.
Yeah. Okay, and what is the biggest unanswered question facing Uranium Royalty Corporation?
Not much. I mean, the challenge for us is to just grow that portfolio, and the balancing act that I have is to obviously not overpay for royalties, because we want to make accretive acquisitions. I mean, if we wanted to overpay for royalties, we'd have 10, 15 more in the portfolio.
Yeah.
But we also need to be aggressive enough and find that sweet spot between what is our reasonable rate of return and still be cost of capital competitive with the counterparty. And I'm really encouraged because we have projects in our pipeline right now that are byproduct producers of various commodities that are their main focus. Uranium is a secondary focus, and we can provide the financing for a bolt-on circuit that will allow them to recover not huge quantities of uranium, but enough to make it very attractive for a company like ours. We're so used to black swan events in the uranium business being negative that we're now seeing surprises to the upside almost monthly or weekly in some cases. So it's exciting times. We just have to execute now.
Yeah, yeah. And what could go wrong?
Listen, we don't control the mines that we invest in. We're not even a joint venture partner. And so we're totally reliant on those counterparties to execute on their business plans. So, we're dependent on their success. And that's what's important about the upfront due diligence, that we get into the right projects. And I think for investors, I think they like that fact. I think some in the retail space, get overwhelmed by investing in individual mining companies because they don't have geologic or engineering expertise, and they like the fact that someone like ourselves are vetting these projects and doing that sort of groundwork for them and putting it in a portfolio.
Yeah, yeah. That's your one chance before you invest in it to when you do your due diligence, because once you got it, you got it.
We do, and keep in mind that most times we're a top line gross revenue royalty. We do have net profit interest, but when you're on the gross revenue, you're paid first.
Yeah,
and it's a really great thing. Now, we want those mines to be competitive and make money, because if they don't, they're not going to be producing. But it's nice to be a top line exposure rather than bottom line if you have inflation blowups or things that are kind of typical in mining.
yeah, yeah. Yes. Okay. Now let's move on to Uranium Energy Corporation.
Yep.
We'll start back at the beginning. Go ahead and give us the basics: market cap, debt, cash, and enterprise value.
Yeah. So UEC is really an incredible story. Amir Adnani founded it, close to 19 years ago. So we call it an overnight success that Amir has at UEC.
After 2
years.
decades.
But really, it's coming into its own right now. We've been trading at $2.5 to $3 billion market cap. No debt, again, $300 million in cash and liquid assets on the balance sheet. We're one of the most liquid, I think we're the second most liquid uranium equity behind Cameco. We've been trading 7, 8, 9 million shares a day on the NYSE. But we've really been in a hyper growth mode. Over the last 3-4 years, we've invested close to $1 billion in physical uranium and M&A transactions. The M&A transactions alone are over $600 million. And that was the acquisition of Uranium 1, which thrilled everyone in Wyoming to kick the Russians out of the Powder River Basin of Wyoming and get those projects back in American hands. But more importantly, those are our most immediate startups in the portfolio. So the Christensen Ranch irrigary operations in Wyoming are restarting next month. We've been taking the last 18, 24 months to really prep everything, testing the pumps, valves, flow rates. This is a mine that produced up to about 2018, and so it is a restart. But everything's really good to go for an August restart. It's really been exciting to be back in that mode, and we're doing the same in Texas. The second half of next year, our hub and spoke down there will be the startup of the Burke Hollow satellite well field operations feeding the Hobson processing plant. These are Hobson has a 4 million pound capacity. Irrigary in Wyoming has 2.5 million pound capacity. Our goal is to kind of ramp up by the end of the decade to 5-6 million pounds a year production in the United States. Costs are in the $40 to $45 a pound range, and we're completely unhedged. So you can run the numbers on whatever you think the uranium price is going to be. That will be our average selling price. And that's quite unique, I think, for lots of reasons, and lots of valid reasons. Other producers have chosen to go down a hedged approach, and that's fine. We feel that, my job is not to hedge the upside risk of electric utility companies.
Yeah.
My job is to get the investor, the shareholder, the highest possible selling price I can get for that uranium. And I think, it's really going to prove to be an incredible strategy, because our average selling price not only will be, I think, the highest in the business, but it could be by a significant margin.
Yeah.
A lot of contracts were signed in the $30, $40, $50 a pound range over the last 5 years that still have deliveries, going for another 5 years, 6 years at those levels. So, again, it's a different strategy. We can do it because our operations are more flexible. We're not building a $2 billion underground mine that you want to have half the production kind of locked in.
Yeah.
We can scale up or down. Our costs are low. And the production volumes are not such that it's hard. I mean, in the last year, we sold over 3 million pounds of uranium, bringing in $162 million in revenue and $50 million in profit, and had no negative impact on the market whatsoever. In fact, we saw the prices increase throughout that period. So we believe it's the right strategy. I think our shareholders really love that aspect of UEC.
Yeah, yeah. Okay, so 2.5 to 3 billion, no debt, 300 million cash, so enterprise value is about the same as your market cap minus the cash. And you touched on Wyoming. Can you kind of go over the nice timing, by the way, on Uranium 1, just before Russia invaded Ukraine? It was almost like you guys were psychic.
Well, we sensed something because we were very eager to get those assets in our portfolio, and the negotiations with the Russians were not easy, and they were quite prolonged. But coming towards the end of the year, there we were seeing the Russians all of a sudden urgently wanted to close the deal. Almost like, let's get this done.
Too anxious.
And I think obviously they're part of the Rosatom, Russian government.
Yeah.
They knew what was coming in Ukraine, and so they wanted to have that closed off. So it was really great timing. And just, the time to make M&A acquisitions is when the uranium price is $20, $30, $40 a pound, not when it's 80, 90, 100. And I don't know what Uranium 1 would sell for today, but it wouldn't be $115 million we got that for. So it was a great deal.
They were a little too anxious. I like that. You sniffed it out.
Yep.
Okay, so can you touch over Wyoming? You hit a little bit on it, but just kind of give us the basic. Open pit, not under.
It's all ISR, so in situ recovery, and which is low upfront capital cost, low operating costs, minimal environmental impact. We frankly just love it, and I think it's the reason why you'll see U.S. uranium production really go through a rebound. I'm head of the Uranium Producers of America, and we have 5, now I think 6 member companies that have either restarted production or are in the process of restarting. Some of it is in the plateau, Colorado Plateau, with higher grade, conventional that has rare earth minerals and vanadium with it. But I would say, over 80% of production is going to come from ISR mines in places like Wyoming and Texas. These aren't huge mines. When they start up, we haven't guided first year production, but I think the street consensus is around 500,000 pounds for the first 12 months of production. That's certainly reasonable, but you just ramp up from there, and you do that by drilling and completing well fields to stay ahead. It's kind of like in the oil and gas industry, staying ahead of your depletion rate. So our well fields that we're producing from in the first year are all in place and ready just to be mined. Inject oxygenated water and mine them. Where we're spending capital now is for production in years 2, 3, and 4, building out future well fields. And just to give you an idea of the capital required, for every 1,000,000 pounds of annual production for UEC in the United States, it's about a $20 million capex. That's nothing. That's like the budget for tires in a conventional mine.
Wow.
And the reason it's so low is we have central processing plant infrastructure in place. We have 100 million pounds of uranium within 50 to 100 miles of those two processing plants. And so it's really just the incremental satellites and well field header houses and drilling. That's why the capital lift is so low. But it's a very efficient model. If we can grow to 5-6 million pounds a year by 2030 with $40-$45 cost in a $100-$150 market, the cash flows are north of $300-$400 million or more annually.
Yeah.
So it's
that's
the plan.
Okay. And give us an overview of South Texas.
So South Texas, we're developing the largest ISR well field in the U.S., which is the Burke Hollow project. It's a 20,000-acre ranch. We've developed out the monitor well rings and first production areas in production area 1, 2, and we're working on production area 3. We've identified 7-8 million pounds, but as we move along this geologic structure on the ranch, we just keep adding additional resources as we go along. So hard to say what the total resources will be in that project, but I don't want to exaggerate it, but it's almost like every time we drill a hole, we're coming up with uranium in those holes. So that's a good problem. We even had to relocate a cattle pen for the rancher, and before we relocated it to another place, we wanted to ensure there wasn't uranium under it. We drilled there was uranium under it. So,
that's a first world problem.
That's a wonderful problem. But the activity there is going to be constructing the ion exchange columns, the satellite in South Texas. That's a it's an outdoor facility. It doesn't have to be heated in a insulated structure like you would have in Wyoming. So we constructed our last satellite at Palangana in Texas for $10 million and completed that in 6 months. Call it $15 million in 12 months. That's a very achievable plan. So we're full speed ahead on two fronts now, Texas and Wyoming.
Okay. And tell us about Canada and Roughrider.
Yeah, so we really, again, we want to impress on shareholders that we're not just a 1 or 2 mine company and there's just immediate gratification from that production. We want to have a platform for growth and really grow the company to be a mid to large cap, like a large cap uranium producer, but also one of the larger uranium producers in the world. And we're going to do that by producing 5 to 6 million from the U.S., but then by the end of the decade, hopefully bringing Roughrider on. Could be a 6 million pound a year producer on a project that has 60-70 million pound resource at 4% ore grade.
That's good.
Just kilometers from existing mills and infrastructure. The big news item there will be the economic report that we put out, hopefully by early September, that will lay out what will it cost to develop this mine, what are the timelines, what are the remaining permits, what are the milling options, standalone mill or toll milling, and that will be a really important document because I'm not sure the market's really valuing that in our portfolio. We acquired it for $140 million from Rio Tinto. They acquired it for over $600 million in the last cycle and put $100-$200 million into it. But more importantly, if you see, look at the price, the valuation that's been put on Paladin, the Fission, at about $1.5 billion. Well, what would Roughrider be valued at if it was a standalone company? Certainly not $140 million. So we think this economic study will kind of put some more clarity around what that project's worth. But yeah, we're very excited. To be in jurisdictions like Saskatchewan, Texas, and Wyoming, it just doesn't get any better. It's not sub-Saharan Africa, Kazakhstan. We don't have
Niger.
any of those. Yeah. So,
okay, so looking forward, so as far as 2024, 2025, 2026, what production can you see coming out of these projects combined?
Yeah, so the ramp up of ISR mines is kind of very a methodical ramp up. So, Again, under 500,000 pounds in the first 12 months, but then ramping up to 1 million, 2 million pounds. You're only constrained by your license in the individual well fields and the processing plant, but we've got obviously lots of processing capacity. So as we're getting to capacity at, say, Christensen Ranch and running at a full steady state, we'll be bringing on Reno Creek, which is 50 miles from Irigaray, has 27 million pounds, licensed to 2 million pounds a year. The acquisition of Uranium One really saved us probably $75 million, and that we were going to have to build our own processing plant there, but we can truck the resin 50 miles to Irigaray. So that will be the next stage. Beyond that, we have Moore Ranch and Ludeman that are also fully permitted to similar 2 million pound rates. So you can see there's not only visibility to near-term production, but also long life, mine life, with multiple satellites. In Texas, it'll be a similar ramp up at Burke Hollow, and really constrained by the amount of drilling that you do. So the more drilling and the well fields and header houses you can put in place in advance of the current year production, the more you can maintain and increase production. So we target 5 to 6 million by 2030. I mean, we can do less if the market's not responding, or we can do more. But we just, it's visibility to workforce and drillers. I would say, if you ask me, well, what have I lost sleep over? I would say a year ago we were worried that workforce would be a challenge in, say, Wyoming, to really staff up from a very low level, and drillers. And I would say now, as we sit in mid-2024, our hiring of our workforce has been a huge success. We only have one open position left to fill, and we've really hired some really great people with uranium experience, with oil and gas, with coal operating experience, and they're on board and ready to get things started up. So workforce has been a pleasant surprise, and even the drilling capacity is coming back into the state, both Texas and Wyoming. I think a lot of drilling companies, when the uranium industry went into sleep mode, they took their rigs and went elsewhere. And now, if they see steady business from both UEC and other companies in the States, they're willing to come back and invest in new drilling rigs. And so even that has been a pleasant surprise.
Okay, so for 2024, you're thinking half a million?
Yeah, I mean, in the first 12 months of production from Christensen Ranch, Irigaray, we'll probably give a more clear guidance once we're up in production, obviously starting next month. But I wouldn't expect more than 500,000 pounds in the first 12 months in that ramp up. Okay. And similar for Burke Hollow, when it starts up its first 12 months, but then you gradually increase to 1 million, 2 million over 3 years. Okay,
so if I had a whiteboard especially with ISR, it's kind of like slow, and then you kind of hit a peak, and then it's kind of a quick, so, right?
Yeah, and we're fortunate that, before we peak and come down, we're adding additional satellites to maintain the production, and if not, increase it. And that's the key to having 100 million pounds of resources that are fully permitted and licensed within the vicinity is, again, we're not a one-mine company where, what you see is what you get. When those resources are gone, the mine's done. Yeah. We have longevity, which is really a plus.
Okay. And what is the biggest unanswered question facing Uranium Energy Corporation?
Well, again, I mean, a lot of the things we were worried about are actually coming together quite nicely. The workforce, the drilling. Again, I think we're so used to, black swan events kind of knocking us off, at the knees. But I think now we're seeing the surprises are to the upside, and it's happening in demand. The growth in reactors and the restart of even reactors in the United States that had shut down. Yeah.
Extensions.
Data centers and AI demand actually trying to go behind the meter at nuclear power plants and buy that power, that clean carbon-free power, before it hits the grid. Mm-hmm. So suddenly nuclear power is at a premium. Yeah. And that's really exciting. So I think, we've been so conservative, and we said we're not restarting the mines until we hit $60 a pound sustainably. Well, now we're at 85, going to obviously over $100 a pound in the next 12 months. Now it's like, okay, how can we produce more quickly?
Yeah.
But that's a good problem.
Yeah, that's a high-quality problem. I like to call it a first-world problem.
Yes, absolutely.
A first-world problem. Okay, last. What could go wrong? Kind of the same as unanswered question. What are some, barring a black swan event, but specifically with UEC, what could go wrong?
I think one thing that gives us a lot of confidence is sometimes when you go into a new mining operation, you have a lot of uncertainties of, well, can we produce what we think we can produce? Both in Wyoming and Texas, we've produced previously in these sands at these depths with the same chemistry. So it's really not, going into a new area and having new problems. So anything that comes up, we've kind of dealt with at previous operations at Christensen, Irigaray, or at Palangana down in South Texas. So I think we're just, at this stage, we're focused on executing. And, it's really a nice change from treading water and being on standby.
Yeah. All righty. Do you have any closing thoughts?
No, I think, the message for folks here at the Rule Conference is I'm just really excited for the uranium investor who's persevered, hung in there, believed in the story, and now really beginning to see the fruits of those investments. And I think for new investors that haven't gone into the uranium space yet, I honestly don't think it's too late. This little pullback over the last 4 or 5 months has given a great opening to buy good uranium companies like UEC and URC at a real value with a lot of upside from here. I like to call these pullbacks buying opportunities. But Scott, thank you very much for coming on show. This was a lot of fun. I wish you the best of luck. We are literally betting on it. And thank you for tuning in. Be sure to support the show and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.